Well, welcome everyone. Welcome to this month's Wednesday webinar where we are going to talk about FAFSA simplification and the changes that are coming. I'm Mila Tappan, and obviously from the Finance Authority of Maine. And with me today is Maria McDougall. So you can all see Maria. Maria is going to be monitoring the chat and checking out your questions. She's going to, when I pause, let me know what questions we have. She is going to jump in if there's something that's particularly confusing that I haven't done a good job of explaining. Whatever might be the case, she's there to respond to you. So we are recording this, so this is going to be available after the fact. This is a large group. This is the largest group we've ever had. We have 163 registrants, excuse me, and currently we have over 150 people on with us. So you're a mix of financial aid people, school counselors, professionals who work with students, access professionals or adult ed people, but we also have a few parents as well. So we're going to try to thread that needle, knowing that our audience has a whole variety of people in it. Today's session is going to be an overview. These changes are significant. There are many, many changes coming. We have not yet gotten any guidance from the Department of Education on these changes. So this is just meant to be an overview. We know there are going to be questions that we can't answer today, but this is the first of what I anticipate being many trainings where we will dig into these changes. So most of what I'm going to talk about today is a result of reading what's changed, but specifically paying attention to what NASFA, the National Association of Student Financial Aid Administrators, has shared so far. And some of you may be familiar with Mark Kantrowitz, who is kind of like a guru in financial aid world. And so it's also what his interpretation is of some of these things. So with that, let's go ahead and get started. So at the end of the year, there was this, they're jokingly calling it the Corona bus. So many people are familiar with the fact that there's this omnibus legislation that incorporates all sorts of different things. So it was mainly meant to be a COVID relief bill at the end of December, but in with it, there were a couple of other major things, one of which affected the current year or the upcoming year of the FAFSA, in the sense that the Pell Grant, it has been increased. So for the 21-22 year, the Pell Grant is going to be $64.95. So that was very good news. Additionally, there were COVID funds for higher education. But then in amongst this, and there weren't all that many pages of it, because it was like a multi-thousand page bill, was this FAFSA simplification, this kind of mini higher education reauthorization language. The higher ed bill needs to be reauthorized. It's way overdue. And so this is kind of a mini version of a reauthorization. So some of you may be familiar with Senator Lamar Alexander. He has retired since, so he was done in January, but FAFSA simplification has been his thing for years and years and years and years and years. And so I think as somewhat of a gift to him, people finally said, let's get this done. Let's get some FAFSA simplification in place here. So that is how that ended up being in that particular bill. So really great news. The FAFSA is going to be more simple. Questions that need to be answered are going to go down from 108 to approximately 36. Even currently, not everyone has to answer all of the questions. So that even that 36 number will vary, but the good news is they will be much reduced. The other thing is that verification should be better going forward. There should be fewer people selected for verification. Now, the good news is that we're hearing that even this year, they've refined their criteria for selecting people, and it does seem better this year. But it should get even better going forward as more and more data is transferred from the IRS. As we know, when people don't use that IRS data retrieval tool, they're more likely to get selected for verification. So as that tool expands and more data comes from that tool, that is going to mean that verification should be reduced. So that's very good news. Now, the majority of what we're going to talk about today is not going to go into effect until the 23-24 FAFSA, and that's the FAFSA that will become available on October 1st of 2022. So the vast majority of these changes are still a little ways off, but we decided it was really important to go ahead with this because there are changes that are going to impact, virtually everyone in some way. So to know this sooner rather than later, we thought would be really helpful. So first things first, goodbye to the EFC, that dreaded expected family contribution that none of us want to talk about because we all know that it's really misleading and it isn't what it says it is, right? Very few families end up actually paying their expected family contribution. Sometimes they pay less and a lot of the time they pay more. So getting rid of that, I think, is really good news. So the expected family contribution is going to become the Student Aid Index, or the SAI, because we love acronyms in the financial aid world. On the surface, the EFC going to the SAI is simply a name change. It is simply a name change. There is nothing significant about the fact that it's a name change. That's all it is. It's just meant to be more clear. We're going to talk in a minute, though, about the other things that are happening that are going to have an impact, but this is literally just a name change. One other big name change, and this is one for people who get a little bit more into the weeds with the FAFSA, is within the FAFSA, there's something called the Simplified Needs Tests. And people who qualified for the Simple Needs Test, they didn't know they did, they just knew that they didn't have to answer asset questions. So that has been renamed to called the Applicants Exempt from Asset Reporting. So I don't know what they're going to make the acronym be for that. I've heard it called AIR or something like that. But the SNT is going to actually go away and be replaced, though, by the AIR. And we are going to talk about what that criteria is going to be. So I talked about the fact that the EFC changing to the SAI is just a name change. But in addition, the need analysis formula is changing pretty dramatically in some ways, as is Pell Grant eligibility. So if they had just changed the name, there would be no big differences. But because they've also made changes to the need analysis, we are going to see that the information that we receive from the students and how their eligibility is calculated, all sorts of things are going to be changing. One of the changes is going to be that the SAI can be as low as 1,500, a minus 1,500, a negative 1,500. So right now, the lowest in EFC can be a 0. So the SAI will go lower than that and help schools be able to determine which students have what level of need, so that students will have need that exceeds 0 in essence, and they will be able to have that information when they're making their determinations and awarding financial aid. Please forgive me in advance if I say EFC when I mean SAI, okay? I'm going to try really hard to keep those straight, but I may well have a slip of the tongue. That SAI is going to be used just like the EFC is now to award federal financial aid funds. That's what Title IV aid is it's federal financial aid funds, with the exception that maximum and minimum Pell amounts are going to be determined separately, okay? Otherwise, the SAI just replaces the EFC in the sense that it's still going to be used in the same way that the EFC is currently to award financial aid funds. There are going to be two pathways to determine Pell Grant eligibility. The first pathway is basically what we're used to now. So it's a very similar, the formula behind the scenes changes a little bit, but basically the SAI determines how much Pell Grant a student is eligible for. That stays in place. But what is changing, and I think this is really good and exciting, is that a second formula is basically going to overlay that original formula, and it's going to be based on the poverty line tables. And that criteria is going to be used to determine eligibility for the maximum and the minimum Pell Grant eligibilities. If you're confused, hold with me for a moment, because when I first heard this, my head started to spin. I'm like, I don't get it. But here's how it's going to work. Say you're working with a student. So what you're going to do first is you're going to say, I wonder if my student's eligible for a maximum Pell. And so we're going to go through the criteria to determine if they're eligible for maximum Pell. Let's say they're not. Then we're going to see if they're eligible for a Pell based on their SAI just like their EFC currently. The SAI amount, the SAI will determine the Pell Grant amount. And the Pell Grant amount, I love this, I think is going to be fairly simple, is going to be the maximum Pell minus the SAI, okay? So let's say the maximum Pell is 6,500. Let's say the SAI, the old EFC, is 1,000, then the Pell Grant amount would be, did I do that right? Pell Grant amount minus SAI would be, I used a different figure in my head. I'm going to come back to that in just a second because I've got it written down on a future slide. But if the student doesn't qualify for a Pell that way, then what we're going to do is we're going to look at the student to determine whether or not they're eligible for a minimum Pell, okay? So if they're not eligible for maximum, they're not eligible for Pell based on the SAI, then we are going to see if they're eligible for a minimum Pell. Let me go through each of these because I think each of these slides will clarify how that's going to work. So first of all, who is eligible for a maximum Pell Grant? These students who are eligible for maximum Pell Grant are going to find filing the FAFSA as simple as possible, and they're going to shortcut a lot of things. So first of all, if someone is a non-tax filer, so for dependent students, if their parents are non-tax filers, or for an independent student and their spouse, if applicable, if they're non-tax filers, guess what? They automatically have an SAI of -1,500. They don't have to jump through all of these hoops. We just know right out of the gate, if you're working with non-tax filers, once this goes into effect, they have maximum Pell eligibility, whatever happens to be each year, right? Because the Pell amount typically changes every year. And that's why we're talking about maximum Pell, not a specific dollar amount. They're going to be eligible for that maximum Pell. Simple as that. Additionally, children of certain deceased veterans or public safety officers, are also going to be eligible for the maximum Pell. So we have a student who's under the age of 33, whose parent died after 9/11. They are going to be eligible for the maximum Pell. So there'll be some questions right up front. They meet that criteria, maximum Pell. Okay. Additionally, students can qualify for a maximum Pell simply based on the poverty tables. So for example, if we have a dependent student whose parents are not single parents, so let's say they have a mom and a dad, their parents in their household, if the parents' AGI, if their income is below 175% of the poverty level, they're eligible for a maximum Pell. Again, simple as that. If their parent is a single parent and their AGI is below 225% of the poverty level, they're eligible for maximum Pell. Same thing with independents. Independent students who are not single parents, if their AGI is below 175% of the poverty table, they are going to be eligible for a max Pell. Independent students who are single parents, their AGI can actually be 225% of the poverty level, and they're going to be eligible for the maximum Pell. Okay? Nice, straightforward, simple. So that's who is going to be eligible for a maximum Pell right out of the gate. Now, let's say a person, see, this is where I did the math over here, you guys. Let's just say the person is not eligible for a maximum Pell. Okay, they file taxes, they don't meet any of that other criteria. Their income's still pretty low, but it's higher than those thresholds, that 175% or that 225%. They can still be considered for a Pell Grant. And they're going to be considered for a Pell Grant based on their SAI, just like they are currently with the EFC. So their SAI will be subtracted from the maximum Pell amount, whatever that is, again, for a given year. And so maximum Pell minus SAI is how much Pell Grant they would be eligible for. It's actually way simpler than it is now, because now we don't have to refer to that horrible table, right? So let's just say the maximum Pell is $64.95. They have an SAI of $42.50. They're going to get $22.45 in Pell for a full year if they're full-time. Okay. Then
I got some questions.
I bet you got some questions. A little nervous. Okay, let me do this.
It's okay. It's okay. A couple of them are worth, I think, and likely are going to be our educated guesses. Yes. Because just as a reminder, we don't have a ton of details on this yet, but a couple of good thoughts. Will eligibility for maximum Pell be an automatic flag for verification? And along those lines, same thing, would like wards or homeless students automatically qualify for maximum Pell?
So first of all, yes, I do believe that, anyone who doesn't have to file a tax return is going to be eligible for maximum Pell. Okay. So all of those students who don't have to file a tax return. So if I've got an independent student who's homeless, let's just say they are 19 or 20, they probably are not having to file a tax return. They're going to be eligible for the maximum Pell as we understand it. I do not think that these students will necessarily be selected for verification. I think we're just going to have to, wait and see about the devil being in the details, but I would not assume that they will be. I do think there's an effort to make things simple and make things easier, especially for those students who are most needy. Famous last word.
That was my thinking too. That was what my gut was telling me. Good question here. How will, the deceased parent from like the armed forces or public service, how will that be verified? So people just can't say yes and automatically.
Right.
I don't know that we have detail. I would imagine some kind of documentation would be required. But.
Yeah. Well, I think that I think the documentation will be different. This is a guess. Right now, there is veterans information that exists out there. So there's already matches that occur with the databases that the federal government has for their veterans. So some of that probably happens more automatically. I think that if someone was killed, a police officer was killed in the line of duty, there's going to have to be documentation of that will probably be different and probably be much more in the line of the student having to provide something themselves. So I think in some cases it's going to be a database match. In other cases, I think it's going to be having to provide that documentation to the school.
Yeah.
Okay.
And this one says, when it says independent student, single parent, do they really have to be a parent and not a single person? I'm
going to show you a slide in a moment. There's actually a third category as well that you could look at. So there's in the independent category, there's single students with dependents, and single parents. Independent students with a dependent other than a spouse, and independent students with a spouse. So there's actually 3 categories there. So
yeah, we'll which leads me to, Pell. Someone said, so no more Pell charts, which is,
we're going to have other charts.
Yeah, there's going to be there will be no lack of charts as far as I know.
No, absolutely not.
Okay. I can answer a couple of these kind of moving forward in the interest of time. But if we don't get to your question, we will get to it after. So
and what I'm going to do is I'm going to finish up this Pell section. So Maria, know that I'm going to finish up the Pell section. I'll stop again.
Okay.
And we'll recap. Okay. And then we'll take any questions that seem like they're necessary to see if we can clarify things.
Great.
Okay. So we've talked about students who are eligible for maximum Pell. We've talked about students who aren't eligible for maximum Pell. So they've been determined whether or not they're eligible for a Pell Grant based on their SAI. Let's say that's a no. Then they get determined for eligibility for a minimum Pell. Okay. So this is how that looks. So if you're not eligible for a maximum Pell and you're not eligible for a Pell based on SAI, you still get to be considered for a minimum Pell. And the minimum Pell is similar to the maximum Pell. It's just that the thresholds are higher. So those same categories, dependent students who are, their parents are married, dependent students whose parents are single, and then the 3 categories of independent students. And you can see that their minimum Pell is based on their placement on the poverty tables. So what I think is really interesting about this is that, you can see that an independent student who's a single parent can get a Pell, a minimum Pell, if they're less than 400% of the poverty line. And of course, the poverty line also goes into detail, another chart, because the poverty line is not only based on your income, but also on your family size. Okay, so there's not one amount, which is why we're not showing you one amount, because it does depend on the size of the family. Okay, the minimum Pell Grant amount is going to be the max, 10% of the maximum. So let's just say in a given year, I'm going to round the numbers, this is where I was getting myself confused a moment ago. Let's just say that the Pell was $6,500 for a year. In that year, the minimum Pell would be $650. Okay. So I'm going to back us up for a moment because I want to show you what we did. First, we considered students for maximum Pell. Very straightforward criteria. If they weren't eligible for maximum Pell, then we considered them for Pell based on their SAI. If they weren't eligible for Pell based on either of those, then they got looked at for the minimum Pell. Isn't that clear as mud? Took me a couple days to get my head around this, you guys. So here are the poverty line tables, just in case you want to get a sense of what those look like. What I think is the biggest game changer here, and what I'm most excited about, is that if I'm working with a student who, say, is a freshman or a sophomore in high school, and I'm thinking of my friends in the TRIO programs, for example, you can talk with that student, knowing their family situation. If they have an idea of what their family's income, is they can see whether or not it looks like they're going to be eligible for a maximum or a minimum Pell. So if you've got a dependent student whose parents are married and you know that their income, they're a family of four, and you know that their income is about, $40,000 rate based on these charts, you're going to have a good indication that they're going to be eligible for that maximum Pell Grant. So I think in terms of early awareness, this is a really big deal and is going to help us predict much earlier when students are going to be eligible for that maximum or that minimum Pell. These changes are really going to benefit independent students. As I mentioned a moment ago, independent students are going to find that they can have really significant incomes and still be eligible for some Pell Grant. I mean, look at look at down here, this category here, and again, we're looking at the minimum Pell here. So we're not the maximum, but the minimum. But the incomes can be really pretty significant and the students can be eligible. We've always known that there wasn't one income that was a cutoff. We've always said you got to file to be sure. This demonstrates this. This really is dependent on the family specific situation, whether parents are married or not married. Single parents obviously are looked at very differently and to their benefit. Family size, those things matter. And this chart can help clarify that so that people can go into college long before they even apply and do their FAFSA, they can have an idea of what they are eligible for. I'm going to show you one more chart before we take a very quick break. This looks wicked complicated, but look how simple it is in some ways, okay? Because you can see my cursor, right? Maria, can everyone see my cursor? Okay. Look how simple this is. Did you have to file taxes? No. And you're magenta. You're eligible for the maximum Pell, okay? Did you have to file taxes? Yep, I did. But my parent died under these circumstances. Okay, guess what? You're eligible for the maximum Pell. I'm a single, are you a single parent? Nope, but my income is below that threshold. Okay, I'm eligible for the maximum Pell. And then if I'm not, I can see whether or not I have to provide asset information or not. And then I'm going to go up over here. So I'm not going to, drill down on this chart any more than that. But the chart itself looks complicated. But like any good flow chart is supposed to do, once you find your pathway, it leads you right to the end. And it's nice and simple. So I think once we start to get familiar with this, we're going to find that many students are going to be in that first half on that left-hand side, and they are going to be able to very easily identify whether or not they're eligible for a maximum Pell. So let me take a quick break, Maria, see what we have for additional questions and what we might want to clarify related to the Pell Grant before we move on and talk about some of the other changes. You're on mute.
It's like the phrase of the year.
Every day it happens, doesn't it?
I'm more afraid that people will hear the kittens, so I'm trying to keep muted. So this person asks, a married teen parent who is living with her parents, would that qualify for max Pell? Which is a good question.
A married teen parent would still be considered independent. And as an independent student, she probably, I mean, it's a guess as to whether or not she'd have to file taxes, but I think there's a pretty good chance she's probably not going to have to file taxes. If she doesn't, she's going to be eligible for maximum Pell. Yeah. If she does have to file taxes, we'll go through the comparison with the poverty line tables, and, depending again on her income, good chance that she's below those thresholds. If she's going to school and has a child, and, not that people aren't in some of those circumstances still working a ton, but hopefully she's not having to work so much that she wouldn't still qualify for a maximum Pell.
Yeah, that was my thinking. And then the example you gave landed at like, a little over $2,200 a year. And this person noted it seemed low for how much tuition costs are. Is there any sense of Pell maximums increasing? Which I was waiting for someone to ask. So
yeah. I mean, it's going up by $150 next year. I think that certainly is one of the things that many of us who work in the field, are really, really hoping for, that there'll be some bump ups to Pell in general. Pell has not kept up with inflation. We could do a whole webinar on the history of the Pell Grant, but many organizations are focused on it. NCAN in particular is really working hard to advocate for higher Pell Grant amounts. So yeah, that would be super. The Pell Grant goes a very long way at our community colleges. It goes a decent way at our in-state publics. But after that, it certainly is a relatively small percentage of the cost. So that is always on our minds.
Yeah. In a perfect world, right? There, somebody noted the number of children does not seem to increase, Pell, and we'll talk a little bit more about household size stuff.
Oh yeah, we're going to talk. Yeah. The number of people in the household, keep in mind that the number of people in the household does determine, just let me back up for a moment, what your cutoffs are. Okay. So the more, if we go across this top line here, a family of 4 can have more income and be eligible for the maximum Pell than a family of 3. So, the number of people in the family, it certainly does matter. What we're going to talk about in a moment is the number of people in college within the family. That's going to be a big change. Okay.
Yeah. And this is just a good question related, how often does the poverty table update? So since the FAFSA application lasts longer than a year, how will the poverty table be updated?
Yeah, my understanding is the poverty tables update every single year.
That's what my understanding was as well.
All right, well, let's go ahead and move on to some of the other things. I am anticipating that we might not even get through the full presentation today. If we don't, you'll at least have the slides. We'll be doing more of these, but let's dive into some of the other changes. So currently, and this is going to be a real change for us in doing financial aid nights, we talk about the fact that if a dependent student's parents are divorced or separated, that the student provides, the parent who provides, the parent lives with most is the parent who fills out the FAFSA. Okay. Starting with 2324, that is no longer the determining factor. Starting with 2324, the parent who provides the greater portion of the student's financial support is going to be who completes the FAFSA. Now, I don't want us to get too worked up about this one, because I think if the student is living with one parent most of the time, that is probably still going to be the parent who provides the vast majority of the financial support. So I don't know that this is actually going to change things tremendously for many students. I think where it's going to be more of an issue is if a student splits their time fairly equally, then it is going to be harder to determine which parent provides more financial support. Okay, so it's the financial support that's going to be the determining factor, not who the student lived with most. Okay. In the case where it's equally divided and they just say it is exactly the same, both of my parents provide exactly the same amount of support, which I think is highly unlikely, then it would be the parent that earns the greater salary or had the greater income that would be required to fill out the FAFSA. Not changing that last bullet, but if that parent, whoever that parent is, if they're remarried, the step parent still has to provide their information on the FAFSA. So it's that family income. So there's no change to that. I know people hate that last bullet, but there is no change to that, and that stays in place. Okay. So this is definitely a change. It's a significant change in how we talk about it. In reality, I'm not sure it is going to be as much of a change as we think it's going to be. But for students who do split their time pretty equally, this is definitely something we're going to have to look at, and we're going to have to get better guidance from the Department of Ed. One of the things that I'm just going to touch on today, because I don't feel like I'm prepared to talk about it because we need that guidance, is there is going to be a much closer alignment with the tax return. So where for years we've said, you know what, how you fill out your taxes doesn't matter a bit. Doesn't matter who claims you on their taxes. That has no impact on who files the FAFSA as a parent. It is going to start making a difference, because typically the parent who provides more financial support probably claimed the student on the tax return, unless there are divorce agreements about that and there are shared, arrangements. So this is where we're going to need guidance from the Department of Ed to say, okay, what if we have a scenario where the parent who provides the most support doesn't claim them? So we will get into the weeds a little bit more as we learn more from the department, but just know that this is changing and it is going to be based on the parent that provides the majority of the financial support to students. That's why we want to talk about it now, because we need parents to start thinking about this as they plan their living situations. If they want to be strategic, which I think is just being smart about how they're going to fill out the FAFSA, knowing this, we think can help them. All right, this one's a biggie. Boy, I've gotten questions on this one already. We sent out a 5 on the 5th on Friday, and I had some questions Friday afternoon about this one. Someone literally said to me, Mila, did I misread that? And I wish I could have said yes, but the answer is no. The SAI, so the former EFC, will no longer be divided by the number of children in college at the same time. So for families who have a fairly low SAI, not a big deal. If your SAI is 1,000 and it's not going to be divided anymore, so it's not going to be 500 and 500, it's going to be 1,000 for both. I'm not saying that doesn't have any impact, but that's not as big of an impact. Those families out there who have an EFC, let's say of 25,000 when they have one child in college, and they wait for the day when that second child is enrolled and their EFC is split by about half, and all of a sudden they have eligibility at a University of Maine system school when previously they didn't have any, that was a really big deal. That was very welcome. And I was one of those families that when I only had one in college, it was a lot tougher. When I had two in college, both of them became eligible for more financial aid. So I think middle to high income families are going to feel this. I had someone email me today. They have one student starting in the fall and then twins starting the next year. And this first year, it won't impact them. The second year, it is going to have an impact. So we want families to be aware of that. Initially, this was actually looked at and reviewed to see if it was a mistake. And this was not a mistake. This was intentional. So yeah, so I think this one we may well be dealing with going forward. Now, one of the things that's going to offset this a little bit, and this is getting into the weeds a bit, is that the income protection allowance, or the IPA, not that beer IPA, but another IPA, will be increasing. Now, what the IPA is, in case you're not someone who's a geek like me and like Maria, and you've done hand calcs for the FAFSA, behind the scenes, the formula says, okay, here's what your income is. And then it says, but you need to run your household. So the income protection allowance is basically this number that reflects what it costs a family, at least in financial aid world, to run their household. First of all, the IPA is terribly low. It's been wicked low for a long time. It is the root of why EFCs in the past have been so high. For a family of four currently, it's like $28,000, okay? And it's not adjusted by where you live in the US even. So this IPA is going to be going up. So the numbers that we're seeing are it's going to be increasing by about 20% for parents and for by about 60% for students who are single parents. So this is why some of these students are going to have much more eligibility, because the IPA going up means that the available income that's available to help pay for school is going to go down because more of it is going to be protected. So the IPA going up is a very good thing. If everything else stayed the same, it would probably mean someone's SAI would drop compared to their EFC if nothing else changed. So that's good for families who only have one child in college. They may experience more eligibility one year to the next when this goes into place. But for those families who have two in school, they are going to feel the opposite because that SAI is not going to be divided between the two students. So instead of, if you had an SAI of 20,000 for one student, then you have your second student, you were hoping it'd be 10-10, it's going to be 20 and 20. Okay. Now, my understanding is that there is that possibility that you talk to the school about it and let them know that you have two kids in college. And I think schools are going to have to figure out how they're going to deal with that. That would be a special circumstance, a financial aid appeal. So we'll learn more about this as time goes on as well. I'm not going to get super in the weeds here. I think we need more clarification on this one as well. But when I was talking about the fact when figuring out who is going to be the parent on the FAFSA, it was going to tie much more closely with how tax returns were filled out. The same is going to be the case when looking at who is in the family. So when you fill out the FAFSA, you determine who is in your household. And so how you determine who is in your household currently is who do you provide more than half support to? It's a pretty straightforward criteria. Going forward, that criteria is going to change, and the criteria is going to be much more in line with whether or not you can claim someone on a tax return. So again, don't want to get too knee deep into this one, but who is in the household and who can be counted in the household in the future may change a bit. I don't think it's going to be dramatic, but I think about one year when I could claim my oldest son on the FAFSA as being in our household. And under these new rules, we would not have been able to do that because he wasn't living with us. He was a graduate student. We were still providing more than half his support. So it was easier then to figure that out. But there are going to be some changes related to that. Okay. I think the ultimate goal is to have as much as possible align with the tax return so that verification becomes easier and so that more information can be transferred. So that's the upside of it. The downside of it is we have some cases where the tax return might not explain everything or things might be a little bit more complicated. So that's where we're going to need more guidance and clarification about exactly how things are going to work. All right, we talked about the simplified need test going away and being replaced with something called applicants exempt from asset reporting, which is a mouthful with no good acronym at the moment, like I said. But what this means is simply that we have a group of people who don't have to provide asset information. So it's one of the things we talk about all the time when we're talking about the fact that students families ideally are saving for college, because assets have very little impact on financial aid eligibility. And this is one of the reasons why. So going forward, once this goes into effect in the 23-24 year, anyone who receives a means tested benefit does not have to provide asset information. That's it. That's straightforward. There will no longer be an if and then and when statement, okay? It's simply, do you receive a means tested benefit for the period of time that's in play? And if you do, you are going to be able to skip all of the asset questions. For a matter of fact, you won't even see them, okay? So free and reduced lunch, though, has been removed. So one of the questions that we've gotten a bunch this year is, free and reduced lunch. Everyone at my school is now eligible for free and reduced lunch. So they've taken away free and reduced lunch. That is no longer one of the means tested benefits that would qualify, but replacing that is federal housing assistance. So that is, if you get federal housing assistance, you would be someone who's meeting the means tested benefit criteria. Also in place would be the ones that have been there for a long time: SSI, SNAP, TANF, WIC, Medicaid. Those are all still going to be there. Okay, so that's a one and done. If you receive those benefits in a specified year, you do not have to provide asset information. Additionally, if your income is below 60,000, currently the cutoff's 50, if it's below 60,000 and you don't have any lettered tax schedules, then you don't have to provide any asset information. If your income is below 60,000 and you only do a Schedule C, and the gain or loss is less than 10,000, you don't have to provide any asset information. So I think we are still going to see here in Maine a tremendous number of our families who are not going to have to provide any asset information when they file their FAFSA, either because they receive means tested benefits or because their incomes are less than 60,000 and they either don't have to do schedules or only do a Schedule C and have less than the $10,000 of gain and loss. Okay, so I think that's good news. There's some really good things in here. Another thing that I just wanted to mention, I'm just checking on my time here, is that there are several types of untaxed income that will no longer be included on the FAFSA. They're listing veterans education benefits. I know this one is confusing because veterans education benefits are currently not on the FAFSA, except for the Veterans Affairs Student Work Study Allowance Program. So I'm a little perplexed as to why they're specifically calling that one out, but I'm just going to let that go for today. Workers' comp would not be needed to be provided on the FAFSA. Keep in mind, Social Security already isn't, so that's another one that would not be required to be provided. So those are good things. Cash support and any money paid on a student's behalf will no longer have to be listed on the FAFSA. So if you think about a FAFSA today, a student is supposed to list any money they receive from someone who's not filling out the FAFSA. So their non-custodial parent, for example, has a 529 and they take money out of that 529 and they provide it to the student is supposed to list that on their FAFSA. If the student's grandparent has a 529 and they take a distribution and they use some of that money to pay the student's tuition bill, the student is supposed to count that as untaxed income. That is going away though. So no longer will that be a requirement. So that's good news. That's going to make it even simpler for these students to fill out the FAFSA. So you can see where some of these questions are going away, and that's how we're getting down from 108 down to 36-ish. Child support received will also be removed in the untaxed income section, but will be reported as an asset instead. Now, just keep in mind, that's assuming you have to provide asset information. We've talked about all of the people who probably won't have to provide any asset information. So lots of good things, I think, on this slide. This one here gets a little bit more concerning again. I feel like we're doing the yin and the yang. Here's the good, here's the concerning, is the fact that certain assets that are currently excluded from the FAFSA are no longer going to be excluded from the FAFSA. So that small business exclusion, small family business, fewer than 100 full-time employees, family owned, that's been excluded from the FAFSA. That is not going to be going forward, starting with the 23-24 FAFSA. Additionally, the exclusion for the family farm is going to be gone. Now, the exclusion for primary residence remains. So my understanding and in the research that I've done is that if the family farm is where the family lives and that's their primary residence, and there's one deed that covers the whole property, that's still excluded. But if it's not, if it's multiple deeds, then the residence is going to be excluded, but the farm is not. So again, another one of those areas where we know there's more clarification to come, but just a heads up that is a change that's going to occur. And back to good stuff. So there are a couple of big questions that are going to be gone off the FAFSA that I know this is going to make people really, really happy. First of all, the loss of federal financial aid eligibility because of drug-related convictions, not that there weren't lots of ways you could deal with that, but that's just gone altogether. I mean, I know that we've talked about the fact, that people can do all of these things and be arrested for all of these things and they didn't lose their financial aid eligibility. But if they had certain drug-related convictions, they did. So thankfully, that is gone or going to be gone. So that question will also be eliminated from the FAFSA. So the suspension is gone and the question is gone. Additionally, the requirement that male students must register with a selective service before the age of 26 in order to be eligible for federal financial aid funds, that requirement is gone as well. Now, let me be clear. It does not mean, as the mother of two boys, that my boys who are registered with selective service wouldn't still have to. The selective service requirement stands. It's just that not registering doesn't disqualify you for federal financial aid anymore. Those two things have become separated. So that question is gone. So two big questions are going to be removed from the FAFSA, selective service and the drug question. And these could be gone prior to the 23-24 year. So they have to be gone as of that year. This is one of these are two of the questions that could be gone earlier if that decision is made by the Department of Ed. So we'll see when those happen. If we hear that those are going to be gone sooner rather than later, we will let you know. I know a question that probably is going to be asked because it's come up when we've been talking about it, is they will still be asking the male-female question. So that question will not be going away. And my understanding of that question, whether it gets redefined or additional, categories, they're going to keep that question because they want it for demographic reasons. They want to know who's filing the FAFSA, males versus females. We all have heard, that fewer males tend to file the FAFSA than females, and how we know that is because of that question. So we anticipate that's why they're keeping that question on the FAFSA. Another really good thing, I know Maria's been doing a lot of work with incarcerated individuals. Randy Payne, if you're out there, I know you do as well. So students who are incarcerated will again be eligible for a Pell Grant. Now, some have been eligible for a Pell Grant because there has been this Second Chance Pell program, this pilot program. So there have been some incarcerated individuals who have been getting Pell, but it's going to be expanded. Here's the key though, is that the institutions must be approved to participate. So for example, the University of Maine at Augusta right now is an approved institution, and students attending there can potentially get Pell if they're incarcerated. So the school itself has to be approved, and it is optional. So not every single school out there, is my guess, will necessarily, be participating. We hope they will, but it is going to be optional. We know that proprietary schools won't be because they're not eligible. So if students are participating or attending a proprietary school, if they were incarcerated, this is not going to work for them. So they would need to be attending an institution that's not a proprietary institution. Like with the selective service, And the drug question, this could be implemented sooner. So we'll just have to hold tight and see whether that is the case. All right, how am I doing on time here? Okay, all right, it's quarter off. Dependency override. This one is interesting. This is not a huge change, but I think it's a good change. Right now, if a student is filling out their FAFSA and they can't answer yes to any of the dependency questions to automatically be considered independent, but they have special circumstances or unique circumstances and they are unable to provide parent information, they can still submit a FAFSA. But what happens is they're submitting a FAFSA that doesn't have an EFC calculated, and it doesn't give them any indication as to whether or not they're eligible for a Pell Grant. They basically have an invalid FAFSA. That is going to change with the 23-24 year. A dependent student, a student who's otherwise dependent, knows they have special circumstances, think they meet the criteria for dependency override, they can submit a FAFSA. An SAI will be calculated based on the information that they provided, and they would receive an estimated Pell Grant eligibility on their student aid report. Now, there is still follow-up needed. Just like happens now, the school would have to work with the student to collect documentation as to why they have, what their situation is and what their unusual circumstances are, and document that. So that will all still take place. The school will be required to notify the student of the process and timelines associated with that, okay? So not a huge change, but it does give the student a little bit more information up front. And I just think it was probably difficult for students when they were filing the FAFSA to, that they had this invalid FAFSA, in the meantime, and something was wrong. And it's not that anything was wrong, it's just that additional steps were required. So it's just kind of making it a little bit more straightforward. Dependency overrides, once they have been approved, will continue to be in place unless the school receives information that there's conflicting information, or if the student lets them know that their circumstances have changed and they no longer qualify for a dependency override. So by and large, what will happen is students, once they have a dependency override, if nothing changes, they can know that that's going to continue all the way through their undergraduate career, which is another really good thing. I think a lot of this just has to do with planning, so students can just have more certainty about things. They can predict Pell eligibility better. They can predict what they're going to have to do going forward a little bit easier. And all of that is meant to hopefully help students navigate this process with a little bit more ease. All right, let's talk about financial aid appeals for a moment. I do not think this happens in Maine. I have not ever heard of a school doing this, but apparently there are schools out there who basically just don't do appeals. They just deny all appeals. So they can't do that going forward. But again, I don't think that was ever happening here in Maine. So I don't think that's a big deal probably to Maine schools, because they all are doing multiple appeals, especially this year. Then we also have some additional new examples of special circumstances. So they've kind of broadened what they say are acceptable special circumstances. Special circumstances are under the purview of the financial aid administrator, but having the examples of what's allowable and what's not certainly is very helpful. Another thing that is in place, and it is currently in place in the guidance, so I think they're just trying to make it official across the board, that anytime there's a qualifying emergency, if someone is receiving unemployment, then the financial aid office can zero out their income. By virtue of receiving unemployment, the income can be set to zero, which obviously is going to typically make them eligible for a full Pell, as long as they're working on their first bachelor's degree or whatever. So that's not something that's that different from what can happen now, but just being clarified. And then and there are other things here. I just kind of pick and chose the things I thought were most relevant to all of you, is the fact that we currently have a scenario where if a family, a student is dependent and they need their parents to fill out their FAFSA, and the parents are unwilling to fill out the FAFSA for a whole variety of reasons, we see this, the student can be eligible for an unsubsidized loan only. But in order to be eligible for an unsubsidized loan only, the parents would have to indicate that they don't provide any financial support, which is not always the case. So that is changing. So students, even if their families are still providing some financial support, if they're not willing to fill out the FAFSA, they could potentially still get an unsubsidized direct loan. So, not huge, but a little bit of a benefit. All right, changes to cost of attendance. So cost of attendance is just that budget that the schools use to put together what the cost is to attend their school. That cost of attendance minus the SAI is how much need an individual student would have. So again, some things that I don't think are happening here in Maine, at Maine institutions, but they have clarified, and the department is going to have more authority when it comes to cost of attendance, which has not been the case. Schools will not be able to zero out room and board for students who live at home. So there apparently have been schools out there who, if the student is living at home, they have not been acknowledging that the student still has some expenses associated with that. So they will no longer be able to just zero those out. Again, I don't know of any schools that have been, but if there are, they will not be able to do that. And then in the food allowance, the board allowance, they must have an allowance that is at least the equivalent of 3 meals per day. So I think some schools have been, schools don't want to have these huge cost of attendance figures out there for a whole bunch of reasons, right? Some of it might be that, it makes them look really expensive. And we talk about not looking at sticker price, but sometimes people do. And also because, they've got to try to fund that. So this is just saying that at a minimum, you have to recognize 3 meals per day. Transportation expenses have to include travel from home, school, and work. Changes to the loan fees. I've got lots of financial aid people I think are on this today. You are not happy about this next one. The fact that you are going to have to calculate actual loan fees instead of being able to use average loan fees is a pain in the behind. So I don't know why they thought that was a good idea. It's not like the loan fees, we're going to make or break things anyway. They shouldn't be there at all. That's just my personal narrative. But the fact that they're now going to have to be calculated to be actual is going to be a lot of work for all of you, and we certainly recognize that. Additionally, private loans, you cannot include the fees for those loans in the cost of attendance at all. And then last but not least, you can see that there's something there related to if a student has to get a professional license or certification, that has to be included in the cost of attendance. Currently, it is optional. And this is the last slide. Emergency financial aid funds will not reduce the student's financial aid eligibility. So that's a good thing. We've been, aware of that, but it's awfully good to actually see that in writing like this. There will be a new question. So we've talked a lot about the fact that the number of questions are decreasing, but one new question will be about the student's race and ethnicity. I want to be really clear that it's not a criteria that would determine eligibility for anything on the federal financial aid side of things. It is a demographic piece of information, just like it's helpful to have a sense of where our numbers are at in terms of male versus female. Having a better understanding of who's filing the FAFSA and then who is not is one of the things that I think people all want to have a better handle on. There's an allowance for state and local taxes that's been dropped. It will be illegal to charge a fee to help someone do a FAFSA. So we are glad about that because there's plenty of free help and students shouldn't be paying, and we don't want families paying, and that won't be possible. FAFSA will identify eligibility for other means tested programs. So, we'll see how this works, but my guess is just like with students who are in foster care, they get information about what other services are available, that if someone indicates certain criteria, that they will be notified that they could be eligible for other means tested programs. And then this probably doesn't mean much of anything to many people, but SULA is going away. So financial aid offices have had to track subsidized loan eligibility for students, and students were limited to how much subsidized eligibility they could have. It was a terrible thing, I think. It's very frustrating, very complicated. And the good news is that is going away as well. So I have hit on a bunch of things. I will tell you, this is not everything. There are other things in there, but I think these are the things that I thought were the biggest deal and would probably have the most impact for those individuals on the call today. So I see that we have 6 minutes left. So Maria, I'm happy to try to answer any questions from the water spout that I just threw out there to all of you.
Yeah, we have a couple good ones. And I think there's some of them ask about kind of details and how this is going to work, like how do you do loan fees before you have an actual loan? And my guess is going to be like, assume the maximum and adjust after, which is a real bummer. Like you have to touch it twice kind of thing. But a couple people asked about the independent the DO, the dependency override, and would that be just at the institution or would it carry over? And my guess is there'd be a flag added to the FAFSA, and it would be much like it functions now, would be my understanding. I don't think that would change, but a couple people asked, so I wanted to put that out there.
Yeah, I think you're absolutely correct, Maria, is that when a school does a dependency override now, there's a flag that they set. That flag goes back to federal student aid and is marked on their record. So say, for example, even now we have a student who they go to one school in the fall and the school does a dependency override. If they transferred to a different school in the spring, that school could see that they'd had a dependency override and they could make a decision whether just to go with it or to review it and make their own determination. I haven't seen anything that changes that. I think that will stay in place.
Yeah, that was my understanding. And then this is a good question that about, step parent income and salary. So this kind of goes way back to like household and things, but if the step parent's income is higher, I'm assuming they're doing a married filing joint situation, then is that considered the set of parents to be providing more financial support? And in that case, if they're married joint, my gut tells me yes.
Yeah, I think so. I think so. I think that when, this is one of these things I've been thinking a lot about, I think they're trying to do the alignment with the tax return. I think that's where they think a lot of this simplification will come from. And so just like now, you've identified which parent is on the FAFSA, what it looks at is the AGI. It's that combined AGI for those parents if they're filing a joint return. And even if they're not filing a joint return, they have to add their income together. So yeah, I think that's absolutely going to stay in place, and it is going to impact this because we are looking at finances. But again, I still think that the student, if they're living with one parent predominantly, it's still going to be that parent likely that's going to be providing the most financial support. And we shouldn't really have to get into who's making more money unless the student is really sharing their time fairly equally with both parents. That's what I'm anticipating. But again, this is all still pretty new.
Do you think because there was a question in the beginning about sort of a lot transfers over from the IRS anyway, but I speculate they probably will take like who is claimed as a dependent and things like the child tax credit eventually, maybe not right away, because we all know when they make these changes, it's not exactly super smooth, but do you think those might be things that would come over to help?
I have to think that to get to simplification, that things like at least how many people you are claiming is going to somehow factor into family size. Now that is just a mile speculation. So don't anyone, say, oh, this is what's going to happen, because I don't know that at all. I just think that all of these things are tied together, and we already have the Futures Act, which is trying to transfer over more information for more people. And so I think that's one of the ways they're getting the number of questions down is by having them transfer. Because I think when they talk about having fewer questions, I don't think it means that some of these questions completely go away. I think in some cases it just means the student doesn't have to answer them.
Correct. Yeah, that would be my guess.
And we will have, again, multiple trainings, I anticipate. I think that once we start getting guidance from the department, my guess is we will have a whole session just on Pell Grant eligibility. We will have a session on filling out the FAFSA and, untaxed income and family size and who you count and who you don't. We will be doing that as the date gets closer and once we have more information that we can share with you. Anything else that we want to tackle in this last minute, Maria, or do we call it a day?
I think we could call it, I think people, the one that seemed to be like, oh, that's going to be a big thing is the changing the number in college sort of count. And, somebody had a theory, like, do you think they'll switch, more schools will switch to the profile to kind of work around that? And I was like, well, that's an interesting thought. But I think that's one that, and then someone said, what's the reasoning behind that? And it's like, well, it has minimum impact on needy families. But with the income protection allowance changing and like the new Pell table, maybe that's kind of how it equals out. But there's a lot of, we don't know a lot of the motive behind some of these.
What I did here, and again, this is hearsay, so I probably shouldn't repeat it. But what I did here is that I believe this was actually a Senator Alexander thing. And he just felt like how closely your children are grouped together or decisions about having children close together or far apart shouldn't affect your financial aid eligibility. So that it was a conscious decision that families, just because they have their kids close together versus another family that for whatever reason has them further apart, that shouldn't be the determining factor of financial aid eligibility.
Good point.
You know, I think there's going to be a lot of questions on this. I think there'll be a lot of pushback. You know, I mean, look at, I'm looking at SULA right here now. You know, it's one of those things that they thought was a good idea and now they're repealing it. So, you know, I think if people are super upset about it and there's a lot of talk about it, you know, this is what they've done. It doesn't mean they can't undo something that they've done. But I think we need to be prepared that right now, this is what is going to be the change in 23-24.
Yeah, and just someone said, just clarify, the majority of this is for 23-24. So we do want to make that clear. Yes. There are some things that might be changing, smaller things, but your student aid index, the things like the Pell eligibility is all effective for the 2023-24 year.
Yes, and the only things that would be changing prior to 23-24, they're all the good things. They are the question, selective service potentially, that question being removed, the drug question being removed, Pell eligibility for incarcerated students. It's all good stuff that would be happening sooner. And I do want to say, I do think the vast majority of this is good stuff. Fewer questions, easier process, more Pell eligibility, simpler Pell eligibility. So, you know, I think Maria and I were joking about the fact that neither of us are, you know, we talk about being in the financial aid office because we both used to be and we're not now. And there's some things I don't envy for financial aid people at all. But I think from the student perspective, these are, with the exception of the number of people, children in college, I think the vast majority are really largely very, 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 very positive. Okay. All right. Well, thank you everyone so much for being here with us. I hope you have a great day. I hope this was helpful. You know, please feel free to reach out to me directly if you have questions, you know, and as soon as we get more information, we will be sharing it. So thank you so much for taking an hour of your time and being with us today. So I hope you have a good one.